Welcome back to Lipper's Fund Flows Insight Report. I'm Jeff Turnahoy. For the week ended March 12, 2014, the long-term mutual funds industry saw inflows of about $9 billion this week, while money market funds had outflows of about $3 billion. Let's take a look at our macro groups and see where the details were. Again, equity funds here at the top have about $4.5 billion in inflows. They were followed closely by taxable bond funds with $4.4 billion in inflows. Municipal debt funds had inflows of $300 million. And again, money market funds had outflows of about $3 billion. Well, the news this week was mostly focused on what's going on with that lost Malaysian airliner, as well as events in the Ukraine. For the most part, equity markets were down overall, maybe out of distraction, but certainly out of concern about what's going on in China as their economy appears to be headed lower and maybe a slower growth rate, certainly a slower growth rate on the horizon for them. Let's take a look at equity funds and see what transpired among them. Again, they were down about 70 basis points for this week. News out of Ukraine and China certainly was not supportive of a good equity rally. We've noticed also an interesting development here where outflows, the biggest outflows from equity mutual funds were from China-related products. Best inflows went to Japanese equity funds. So an interesting dichotomy there. We'll keep our eyes on this to see if anything more comes of it. The next group to take a look at is equity ETFs. They had a pretty good week of inflows. They took in about $4.7 billion this week. It was our third best week of the year for inflows. We saw some good inflows as well into the Russell 2000, the IWM ETF, which had about $2.5 billion, one of its best weeks this year for inflows, and certainly one of the more speculative plays out there one can make as far as estimating where the future direction of the broader economy. We saw outflows mostly related to energy industries and sectors. So two of the three outflows this week were from energy-related products. The next group to take a look at is taxable mutual funds. They had inflows of about $4.4 billion this week, one of their best. In fact, I think it was about somewhere around the fourth or fifth best week this year. Flows seem to be accelerating, and as investors are getting more comfortable with the idea that interest rates are not ready to spike. Again, global economic news seems to bear that out. High yield this week had a pretty good inflow number. They took in $415 million. Core bond funds, which have not seen great flows this year, actually were second place with $429 million in inflows. So overall, it looks like investors are starting to really feel more comfortable with taxable bond funds, much the same way they've been for the last couple of years, which is an interesting development, maybe an indicator of an inflection point in their attitude. So we'll turn our attention now to taxable fixed income ETFs. They had outflows this week of about $2.1 billion. That was their second worst week so far this year. This was the best week in a long time for loan ETF funds. If we look at BKLN, SRLN, they had inflows this week. This was, again, for the group, their best week since May of last year. So some investors are starting to rethink loan funds again and starting to plow money back into those. The top outflow this week belonged to the ProShares Ultra 7 to 10 year Treasury UST, which had outflows of about $1.7 billion, a pretty significant number for that product. Let's turn our attention now to those municipal debt funds. The ones that had such trouble finding investors last year now seem to be finding their footing once again. They had inflows of about $300 million this week, their fifth consecutive week of inflows, even though performance was down. And again, we saw that in all three markets for equities, taxable, and municipal debt, that the markets were down for all three of them, yet we still saw flows coming in. So investors have not decided to abandon all hope quite yet. High yield muni funds, interestingly enough, had the best inflows this week, about $204 million. Definitely investors are starting to think that the Puerto Rico situation may not be as bad as it was earlier thought. They had a bond sale this week that went pretty well, so we expect to see some pretty steady inflows into municipal debt funds as investors also decide that Puerto Rico maybe was a crisis that was not ready yet to threaten their portfolios. The final group to take a look at is money market funds. Not a whole lot of interesting activity here. Both groups, the retail and institutional, decided to cut their cash holdings this week. Retail cut about $1.7 billion and institutions about $1.3 billion. Clearly inflows into the other groups were much stronger than these numbers indicate, so clearly investors of all stripes were finding resources outside of the money market funds business to allocate to their portfolios. Well, that'll do it for this week's analysis of fund flows. Join us again next week where we'll tear apart the mutual fund and ETF data for you, or join us online at lipperusfundflows.com for more up-to-date information. Thanks for watching.